It's time now for a look at some of the day's top business stories, and for that I'm joined in the studio by France 24's Cole Stangler. Hi, Cole.
Hey, Axie.
You're starting with China's biggest ride-hailing company filing to go public on Wall Street.
That's right. It could be one of the biggest IPOs of the year, actually. The firm Didi Chuxing counts nearly 500 million users and more than 10 million drivers, perhaps best known for acquiring Uber's business in China back in 2016. With the rebound in travel, Didi could reportedly be valued at around $100 billion. That would put it well on track to have the largest IPO in the U.S. for a Chinese-owned firm since Alibaba in 2014. Though geopolitical challenges may lie ahead from a Chinese crackdown on big tech to trade tensions with the United States. Let's take a look now at how markets are faring to close out the week. A slow day so far on the major Asian indexes as we close toward the closing bell. Actually, modest gains on the Kospi and the Hang Seng, as you can see there, up around 0.5%. Losses, though, in Shanghai. Investors also had their eyes on that G7 summit in Cornwall kicking off today. Talks to boost climate-friendly spending on the agenda. Oil prices, meanwhile, down just slightly, as you can see there. International benchmark Brent crude trading at just over $72 a barrel. After the World Bank said continued uncertainty over COVID working to restrain the pickup in prices.
Well, Cole, investors seem to be shaking off concerns about inflation, despite signs from a key economic indicator in the United States.
That's right. The Consumer Price Index rose by some 0.6% last month, but over 5% when compared to the same period last year. That's the biggest year-on-year increase since 2008. Prices rising in particular for used cars and for travel. The U.S. Central Bank has said any hike in prices is temporary, and with yields on U.S. Treasury bonds remaining low, at least for now, many investors appear to agree.
Gives support to the view that the inflationary pressures we're seeing right now really probably are going to be transitory or temporary. And if that's the case, then, that's what the Fed believes, that we are likely on a path for lower inflation over the longer run. And the Fed will most likely stick to its current intent and being patient and waiting to hike policy rates until the employment record really starts to heal.
Next up, Cole, you're looking at one of the ways in which the pandemic has disrupted supply chains around the world.
That's right. Here in France, the construction sector is facing an unprecedented shortage of raw materials like wood, plastic, and scrap metal. Lauren Berstecker reports.
Michael Lopez's warehouse is usually filled to the brink with construction materials. But this year, it's almost empty.
Donc en temps normal, le stock arrive jusqu'ici et monte quasiment sur toute l'intégralité de la hauteur du dépôt.
Glass wool, plaster, scrap metal, timber, and even plastic, everything is in short supply, and it's having an impact on prices.
Les prix augmentent fortement, en règle générale entre 30 et 100% selon les matériaux.
The shortages were initially triggered by slower production due to the pandemic, but have been compounded by several other factors. The US and China have been making massive purchases of wood and scrap metal, drying up European reserves. Meanwhile, demand for raw materials has skyrocketed in the European Union as member states look to launch large-scale construction and insulation projects over the summer. For masonry contractor Benoît Cuvelier, this unprecedented situation could even spark an unemployment crisis in the construction sector.
C'est la première fois que je vois une telle situation. Alors, il y a eu des problèmes en 2008 où on avait les matériaux mais pas les chantiers. Là, on a les chantiers et pas les matériaux.
There are hopes the situation will improve by the end of the year as production catches up to global demand.
Finally, Cole, it's not just the construction sector that's working through supply chain issues. So is a very well-known coffee chain in the US.
Yeah, that's right, actually. Starbucks grappling with an ingredient shortage in the United States. Ingredients, not just cups, as we were hearing yesterday. The company saying it's seeing, quote, temporary supply shortages for certain items, including oat milk. Starbucks won't say what the other products are, but an internal memo earlier this month reportedly included some 25 different items. Among them, hazelnut syrup, toffee nut syrup, and green iced tea. The company says it's working with vendors to restock the affected products as soon as possible. In any case, Haxie, another illustration here of just how the rebound is catching some by surprise, including major companies.
Cole, with a look through the day's top business stories, thank you very much.